Yo, what's good, everybody? Today, I just want to run through this because this has been such a big thing that not only stopped me from starting to understand the markets and start making money, but bro, this topic is so simple and we all know it, but people just forget it. I want to run through this really fast. This is the order of importance that everything in our trading has to be based off of. First, we need a drawn liquidity, right? You cannot base any single trading idea off of a drawn liquidity, right? In ICT systems, what is the difference between our system and someone who trades support and resistance or indicators or signals or all these things? We have context and narrative. They don't. Your drawn liquidity is what creates your context, period. If you don't have a drawn liquidity, everything that you mark out is either wrong or has no meaning. Like the other day, I had a wrong drawn liquidity, and then I had two SMTs. Entry model was perfect. Every single SMT was not an SMT. It didn't matter. It wasn't manipulation. My stop rates weren't stop rates. My confluences didn't matter at all, simply because my drawn liquidity was wrong. Everything has to be within context. Second thing we have to talk about, manipulation. If you have a drawn liquidity, you know the market's going to this high, right? Because this is what we're doing, right? Market did something like this, right? Generated liquidity, we pull lower, big time lower. We came down, we swept some type of low right here. Now we look really good to continue higher, right? We know we're going to this high. We just ran through this for value gap, looking really good. We're generating liquidity. We need to have manipulation, right? Because at this point, right now in the market, does it look right to just take a long right now and target this high? At this point, does this look right? Does this look right to take a long right here and target this high? If you know the market's going here, you're not sure about any of it higher. You're not sure about how much lower we can go, but you know we're going here. Does that matter? No, it does not matter. Your drawn liquidity only matters because that's how we know where the market's going. Your drawn liquidity does not tell you when to trade. This is why you need to continue walking through everything else, right? Your drawn liquidity is most important, but you need manipulation, right? Understand this. Since we trade with a stop loss, and everyone should, in my opinion, that means we have to have a time, we automatically put a time-based component into our trades, right? Because this is what my stop loss logic is saying, right? I think price will hit this point before it hits this point. That puts time or order into our trading, right? So time and order, right? We know the market moves based off of time and price, right? So we know time comes before price. So what I'm trying to say is that every single trade we take has to be considering time and price, right? Price as in price action, our order blocks, all these things, but time meaning two things, not only just time of day, but time as an order of what price is doing, right? Price right now can go to this high, right? Why can it go to this high? Because it's already done multiple things. It's already came down, it's already stop rated this low, it's already retraced to equilibrium of whatever range you want to draw in. Price has already done all these things that it needs to do to now continue higher, right? We've done all these things, we've gone back to equilibrium, we've now pulled back to this imbalance, right? Price has done all of these things so it can now go higher, right? That's order. That's the order piece of time. So we need to wait for order in terms of time to actually allow us to comply with that time-based component of our trading setup, right? Of our stop loss and our take profit, right? Because when we add before, the word before, right? We want price to hit our take profit before it hits our stop loss. We need to consider time and order of the market. So what I'm trying to say is that we need manipulation because manipulation is the only way to safely align ourselves with that time-based component that our stop loss puts into our trading as a necessity. We need to see manipulation and let the market do what the market has to do before we can get involved down here to take this setup with the safe stop loss, right? So that's manipulation. We need to see manipulation away. And this is what I would call manipulation, right? It's away from the drawn liquidity. That's manipulation. Is this on a chart? This is most likely happening around like 9:50 to 10:10, whatever we want to do within a macro time within those first 2 hours of open, right? Second thing we need to see is a safe entry. How do we get a safe entry? Safe entry in these 2 points is where we use all of our ICT logic, ICT knowledge, right? This is our stuff like midnight open, and I want to draw this in a little bit lower of text, right? Let's use ICT knowledge, and then I want to talk right here. We'll do a little bit of like midnight open. Geez, this is hard to draw, right? So it'd be midnight open. It'd be macros. It would be other things like equilibrium. It'd be all of our fair value gaps, all of our different open levels, all of our different range stuff, all of our low resistance liquidity, all of our stop rates, entry models, all of these different like things that people say ICT overcomplicates and adds too much to. Those like ICT brain rot things. That's what we use here in terms to get our safe entry and game our manipulation in our safe entry, right? How do I do this, right? This is where I simply just wait for my entry model. I'm waiting for market to do one of those things that shows me we should not go lower here because John Liquidity tells me we're going here, period. I'm so confident and I'm basing every trade idea off the fact that I think we're going to go here, right? So now every time we pull away, my whole job is to understand, okay, right now we're in the phase of manipulation. After manipulation, we see distribution. I'm trying to game and guess when the start of the manipulation is happening. I'm trying to catch this reversal that's really only a continuation because all of this and this has shown me that we're going here. So that's when I use my entry model. I'm waiting for equilibrium, fair value gap. I'm waiting for stop rate in terms, I'm also waiting for it to go into my macro. I'm waiting for my inverse and my change in the state. Boom, right here, I'm going to get involved, market order, stop at the low right here. And this is where proper execution comes in, right? You have your safe entry and you're targeting correctly and you're doing all these things. How does execution work out? People will trade and say in terms of this model, let me draw this a little bit more detailed so we can understand kind of what I'm talking about, right? Price will be doing something like this, right? Say this is on terms of our like smaller time frame, our candlesticks, right? Price will be doing something like this, right? We'll pull back right here, then do all this, and then go higher, right? This is most likely what price will be doing a lot of the time to continue out our model, right? So the way that I execute this is I place my stop at that full low because most of the time we're going to be having something like an SMT right here on some small low. And then as well, I'm getting tapped either market ordering right here or I'm getting tapped to that change of the state. So let's say change of the state, right? Then from here, I'm taking my first take profit right here, going break even on my position, and then I'm letting the rest run to the external drop. There are times where I get break even stopped and then price runs. I don't care because my system makes me money over time, right? That's what I call proper execution because I backtested it and it makes systemic logical sense. This is what other people do. And this is the part where you are allowed to blur the lines because as we talked about before, this is most important. Drawn liquidity. Manipulation, super important. Safe entry, not as important. Proper execution, not as important because people can take trades with what I would call completely illogical, improper execution. And since at times their win rate and their win rate might be lower because they get stopped out more, but since their RR is so much greater because of their skewed improper execution, that's why they can allow themselves to take that improper execution and make just as much, if not more, money than someone like me, right? So what am I talking about? Someone might take the fair value gap every single time, even though a lot of times it will be a breakaway gap. They'll just simply forfeit setups. Then they'll place their stop at the low of the fair value gap and they'll run something like this. And they'll just let this go, no take profits the whole way until this high. That's completely allowed. To me, that's improper because it's not following the market and it's too systemic where it's not based on logic in certain scenarios, right? That's what I don't like, but that's okay. That's okay because this is the least important part. That's why people place their stops here and then they'll get stopped out. And then me, with my proper stop placement, I'll just be shown in the position and I'll still have take profit bang. I'm just unemotionally watching this, right? That's the difference. So like we talked about, you need all these things. And I want to run you guys through a trade that I took on Friday to show you exactly how all these things work. All right, so right here is the Friday trade, right? I want to show you guys how I walked through every single piece of this, right? And how I'm able to blur lines on the final points, but I must follow those most important things because that's what actually keeps you profitable, right? So zoom out. Let's go to the 15-minute, right? 15-minute, we have to follow our drawn liquidity, right? How do we figure out drawn liquidity? We use context, all these different things. Okay. What is giving me a drawn liquidity to this low, right? First of all, let's understand what is the week done so far, right? Our week, let's start on Monday, right? Monday, I mean, we can walk through this whole thing and it gives us information, but the whole point that's giving me a good bias is that we pull up to consequent encroachment here, right? We sell off right here, and now there's two things that can happen. Understand this. I'll draw on some lines. This will start to look a lot more familiar, right? Understand the story here. Price is doing, it's jumping off of this level, right? On a bigger time frame bullish bias. We now have this high as a potential drawn liquidity, right? Because we've pulled all the way past this, right? But this can be our drawn liquidity on a 4-hour time frame, but it doesn't have to be the drawn liquidity right now, right? As we talked about before, every single time we're thinking of drawn liquidity, it has a time attached to it. It has a time component. Your stop losses, they all have time components. You don't just have to know where the market's going and say, we're going to go here. Because in a million years, of course, we're going to go there one time. But we have to know right now where are we going to go in the next 5 to 10 minutes, 15 minutes, however long of a time frame trader you are, right? So look at this. I'm watching this. Market runs higher. Okay, sweet. We pull back to the change in the state right here. This is a point where I'm wanting to see the market hold, right? I'm wanting to see the market potentially hold this and run higher. So now overnight session does this. Overnight session just generates a ton of liquidity and pulls back to around OTE of this range. Now there's two conflicting biases and I need more information. Bigger time frame, this is still bullish, right? This can run through these for value gaps and we can just run straight to the highs today. So if that's the case, what does the market need to do? On open, it needs to manipulate lower and then run higher. Okay, sweet. That's my case for a bullish bias. If we're bearish, what will we do? If we're bearish, we're going to hold this range right here, our OTE range. On open, we're going to manipulate higher, placing some type of SMT, and then run lower to take this low. What do you guys think we did? I made my pre-market plan and I said, if this, then this. If that, then that. I'm simply watching completely unbiasedly which one is the market going to do, and whichever one the market does, I'm going to hop on that train. On open, the market manipulates higher, and we place an SMT on this 930 high right here to right here. So we come back in OTE, we place an SMT at OTE, and what do? 5-minute candles do not close in the OTE range. Our 1-minute candles do not close in the OTE range. And right after that, after a little bit of back and forth, we start to sell off. Sweet. We sell off. All right. Internal time frame, you can start to have some conviction of a short bias somewhere around here and maybe get involved here. For me, this wasn't enough because I thought there was a good chance that we want to stop raid the high one more time and then go, right? Notice how I'm thinking of that stop raid conviction, right? I'm thinking of the fact that time is always going to be involved in that bias, right? In every single time we take a trade, time is always involved because I need to see the market go now, not just guess what the drawn liquidity is and wait for an entry model, right? Context and time are always involved, right? So that's why I don't take this trade. But watch this. I wait for this extra, right? Now the market gets super, super close to this low, but it doesn't take it, right? We start to bounce literally right after we get super close to the low. What does the market now do? We now are concrete because right here, big displacement lower to this low. If I asked any person if we're going to take this low, even someone that's never traded before, they'd probably say yes, bro, because we're so close to it. It makes barbarian sense that we're going to go take that low. You get what I'm saying? So now, number one, drawn liquidity, we're handled, right? I'm watching and observing the market. I know we're going lower. That's my trade thesis. Okay, now I need manipulation. Manipulation and our safe entry is our next 2 points, right? So manipulation away from the opposing draw, right? So what is that? It's going to be manipulation, this run higher right here. Big bearish, that's what I like. That's in terms of our drop. Now look at this. We start to pull away. Where do we pull back to? We pull back to not only this right here, if you want to use this as a 1-hour order block right here, if you like Wix for order blocks, that's your order block right here. To the tick, we use that, right? Where else? We pull back to equilibrium of this range. Why this range? Because this is our previous defined range right here. Looks good. Where else do we pull back to? A 5-minute fair value gap. Boom. We barely close above that, holding that nicely, right? Now, if this is where I think our manipulation is going to stop, I don't have to just like trade it and like believe it right here. I don't have to do what they call catch the falling knife, right? I don't have to sit here while price is moving higher and limit order into this right here and make a prediction, right? That's what separates a lot of ICT systems from the ones who just cannot make any alpha, cannot make any RR, right? I'm waiting now for part 3, my safe entry. This is where all of our ICT concepts come into, right? Equilibrium, SMT, stop rates, boom, right? What do I need the market to do to show me the 2 things? We don't want to go higher here, and instead we want to start going lower. I need to see my entry model. Usually I like to see an inverse and a change in the state. Here we don't have an inverse, but we have enough conviction that I'm considering and I'm fine with taking the short. So I see right here an SMT at equilibrium. Perfect, right? That's what I like to see. That's the first thing that I want to see if I'm going to start being bearish. From there, market plays around a little bit, and on 1013 we start to sell, right? Where's our change in the state? Right here. First candle comes in, not too convicted, we could easily flip. Okay, second candle comes in, we're getting below the change now. We don't really have any big fair value gaps in the leg below us. There's no reason that we should run higher. Our 15-minute isn't open yet. We're looking good to start going higher, right? Or to start going lower. So I enter into this position in a short, right? So now this is safe entry. I enter now because this change in the state and these candles have shown me we are going to go now, right now, logically, before my stop loss gets hit, my take profit will get hit because all of this leading up, the story, the 1, 2, 3, 4, 5 steps, they've all shown me that we're going to go now, not later. So I enter now and look where I execute. This is where, like I talked about, we can blur the lines. The correct stop loss is at this high. I move my stop loss a literal candle tick below because this is completely fine. And 99% of the time, the market will not do this. It will not stop this guy out and then run lower. That's how we can always not fudge, but blur the lines between rules and discretion, right? Because this setup, if it's going to go, it's going to go fast. If it's not going to go, it's going to stop me out, chop around, and I'm not going to be trading it anyways, right? So I'm fine taking this type of position. We enter him, and within like 5 minutes, take profits delivered. We hop off, no problems, right? Watch how I use every single step. Number 1, draw liquidity, most important. Number 2, manipulation. Number 3, smart entry. Number 4, proper execution. Understand the importance. The first one, draw liquidity, non-negotiable. Number 2, manipulation, non-negotiable. Non-negotiable. 3 and 4 is where you can start to play around, and that's where we have variability. Every single ICT trader is going to wait for those 2 beginning things. Number 1, draw liquidity. Number 2, manipulation. Make sure these are concrete, and without these, you do not take a trade, and your losses will be significantly decreased. Please, y'all. So hope you guys enjoyed the video. Hope you guys learned something. Reaffirmed one of the most important parts of trading that I hope you guys are adding to your skill set and like really focusing on. Because the second I started getting back to these basics and focusing on these every single day, that's when I started to grow and mature as a trader. So hope you guys got some value from the video. That video, I'm going to catch you boys later, and peace out.